What you believe to be safe behind the thick walls of your bank no longer exists. At this very moment, an invisible crack is running through the French banking system. A silent crisis, stifled by the mainstream media, minimized by politicians, and masked by the reassuring speeches of the central bank. But the numbers do not lie. 3.2 trillion euros of public debt, interconnected banking giants like dominoes. If one of them wobbles, everything collapses. Do you think you have time? In March 2023, it took exactly 48 hours to wipe Silicon Valley Bank off the map. 48 hours for trust to evaporate. I call myself a former systemic risk analyst. I was at the heart of the three largest European institutions in 2008. And what I see today on the balance sheets of BNP Paribas or Société Générale terrifies me much more than back then. Because this time, central banks no longer have any ammunition. Interest rates have hit rock bottom and safety nets are torn. In the next few minutes, we will break the taboo. You will discover the think shadow indicators that prove an earthquake is approaching. And most importantly, the exact strategy to exfiltrate and secure your assets before accounts are frozen. Don't wait until it's too late. Listen carefully to what follows. Let's start with the foundational lie. The lie that 99% of savers take at face value. When you deposit 10 euros into your checking account, you imagine that this money is safely resting in a vault in your name. This is false. It's an accounting mirage. Your bank takes your money, keeps a crumb, barely a few percent, and lends the rest on the markets or to high-risk profiles. This is the fractional reserve system, a house of cards that stands only on one condition, that you, me, and the rest of the French do not ask for our money at the same time. If everyone shows up at the counter, nothing. The bank must liquidate its assets in a hurry. And liquidating in an emergency means selling at a loss. Selling at a loss means insolvency. Insolvency means bankruptcy. Everything follows, just like that. In France, 4 banks carry the most dangerous adjective in finance, systemic. BNP Paribas, Crédit Agricole, Société Générale, BPC. Too big to fail, we are told. In reality, they are mostly too big to be saved. And the worst part is that the poison circulating in their veins is injected by the state itself. For decades, French banks have accumulated an asset deemed perfect, a risk-free asset, the debt of the French state. They hold hundreds of billions of it on their balance sheets. Regulators turned a blind eye, not even requiring capital to cover this exposure. But the tide has turned. France has entered a historic budgetary deadlock. Public debt has peaked at 112% of GDP. The deficit hovers around 6%. Rating agencies like Fitch have downgraded France's rating. Moody's has shifted to a negative outlook. Standard & Poor's is scrutinizing every misstep. When a country's rating collapses, the value of its bonds plummets. And who bears the loss? Your banks. They're sitting on a mountain of securities whose value erodes day by day. Their real capital is melting away like snow in the sun. Why don't they sell these bonds to stop the bleeding? Because they are trapped. A massive sell-off of French securities by BNP or Société Générale would trigger immediate bond market panic. Prices would collapse, exposing billions in latent losses. They are doomed to sink with the ship, praying for a miracle. But the markets do not believe in miracles. They have already started betting on the fall. There is a market that the general public never looks at, but which dictates the survival of institutions. The CDS market, credit default swaps. Think of it like insurance against your house burning down. If the risk of fire increases, the price of insurance skyrockets. This is exactly what is happening for the major French banks. In the span of 2 years, the cost to insure BNP Paribas' debt against default has risen from 30 basis points to over 80. For Société Générale, the situation is even more alarming. We have surpassed 120 points. Remember, in 2008, just before Lehman Brothers collapsed and took the global economy with it, the prices of these insurances were stagnating exactly at these levels. We have entered the red zone. It's not yet general panic on the street, but in the trading rooms, the nervousness is palpable. Banks are starting to distrust each other. They refuse to lend money to one another. And what the balance sheets of these institutions hide goes far beyond the simple French debt. Let's take a closer look at the balance sheet of a giant like BNP Paribas. Over 2 trillion euros in assets, an astronomical figure. But what is their real value? French banks do not only hold government bonds, they hold Italian, Spanish, and Portuguese debt. They are propping up zombie companies, firms that survive only thanks to artificially low credit and are unable to cope with rising rates. Let's pause for a moment. Stay with me. If you are still listening after all these explanations, it means you are part of the 10% of people who have the clarity to face reality. You understand the mechanism of fractional reserves, the debt trap, and the degradation of balance sheets. You are already much better equipped than the majority of savers. But what I am about to reveal to you about political paralysis and the protection plan is the ultimate breaking point. Stay very attentive. Let's return to these balance sheets. We are proudly shown solidity ratios that comply with international rules. But ask yourself, who determines the risk level of these assets? The banks themselves, with the blessing of regulators who have every interest in maintaining the illusion of solidity. Complex derivatives lie in the shadows like time bombs. And if the system trembles, don't count on the state to cut the power. The state is paralyzed. France is going through a major institutional crisis. A fragmented assembly, a fragile government, impossible reforms. While deficits widen, political power looks elsewhere. To save a distressed systemic bank, massive capital injections would be needed. But where would that money come from? The state? He is already strangled by his own debt. Borrowing more would definitively destroy his credibility. Private investors? No one wants to bet on a ship that is taking on water. Europe? Germany is in recession, Italy is suffocating. No one will come to save anyone. This is the great secret of financial Europe. Everyone is connected, everyone is weakened, and no one has the means to rescue their neighbor. So, what is the official strategy? Silence. The Bank of France downplays. The ECB multiplies soothing messages. Everything is under control. Remember this golden rule of finance. The more authorities insist that a system is solid, the more you need to look for the emergency exit. They know that if they admit the problem, they trigger panic. And panic destroys everything in 48 hours. The fuse is lit. The time for questions is over. Now is the time for action. Your savings are not a fatality. You do not have to be the collateral damage of their mismanagement. Here is the immediate action plan in 5 steps to secure what you have built over the years. First, the radical diversification of your deposits. Never leave all your chips in the same bag. Spread your liquidity across several institutions and ideally outside of the 4 major systemic banks. The state guarantee of 100,000 euros is a mathematical fiction. The guarantee fund does not have a hundredth of the amounts needed if a large national network collapses. Second, the bulwark of physical liquidity. Keep at home, in a highly secure place, a cash reserve. Not fortunes, but enough to cover your vital needs for several weeks. Remember Cyprus. Banks closed overnight, ATMs capped. Those who had cash weathered the storm. Third, physical gold. Gold is nobody's debt. It does not depend on any bank failure, any algorithm, or any government. allocating a portion of your wealth into physical gold stored outside the banking system constitutes absolute insurance against monetary collapse. Fourth, geographical exfiltration. Do not limit your horizon to the Eurozone. Open a deposit account in historically stable and capitalized jurisdictions, such as Switzerland. Having a gateway account abroad offers you a lifeline if capital controls were to be activated here. Fifth, psychological preparation. Panic is a virus. When the crisis erupts, the media will saturate the space. Social networks will go haywire. Your best weapon will be your composure. Make your decisions now with a clear mind. A question now arises for you. If your bank's counters were to close tomorrow morning, how many days could your family hold out?